Well, over the past fiscal year, there's been a substantial increase in commodities across the board, with a 40% rise in base metals, a 26% jump in oil markets, and an 82% gain in iron ore. And as the financial year draws to a close, it's time to take a look back on the performance of the overall sector and discuss what we may see in the coming year. To do this, I'm joined by Jonathan Barratt, Managing Director with Commodity Broking Services. Jonathan Barratt, welcome to Business Today.
Good morning, Whitney.
Now, as I mentioned, there have been big rises throughout the sector. Was that a surprise?
Whitney, no, it wasn't a surprise. I think because the world threw so much fiscal stimulus at their economies that the result was that commodities had to rise. So not a surprise. I think it was just all part of the plan.
All right. Now, of course, China has been a key driver for strong commodity price recovery, with 60% of iron ore landing there. Yeah. Can we expect that to continue?
Well, look, it is going to be interesting because we are a little bit interested in the way China's going to develop. At the moment, we see the economy actually trying to slow down. I think it might have a little bit of a slowdown, but overall, I feel that China's growth will continue. And as a result of that, demand for commodities will also continue.
It's interesting, though, because there are differing views on what impact that change to China's yuan policy will have on commodities. What are your thoughts on this?
Look, I think the fact that China's now using that as part of a fiscal stimulus, so to speak, it will always mean that demand for commodities will be there. If the economy slows down, they'll allow the yuan to appreciate. And if it appreciates, then demand for commodities will continue. So I think China's going to use it more as a tool to create and keep domestic growth occurring.
Jonathan Barratt, the move from annual contracts to short-term pricing was a major change. What sort of fallout has there been from that?
Well, Whitney, that's quite interesting because we didn't have a lot of fallout until last night when we saw Mr Albanese basically come out and said, look, if the spot price remains quite weak, then we're going to go back to annual pricing. It's always good for the consumer when the price is down, bad for when the price is higher. At the moment, the price is down, so that's bad for the producer. So it'll be quite interesting to see that space over the next week or so.
But they can't have it both ways. Is that really a serious comment? Would they return to those long-form contracts?
I don't think they will, but it is a comment with the prices lower than the annual price is. Iron ore at the moment is trading at a discount to the long-term prices. So I think it's a comment you'd expect from a producer when that occurs.
All right, let's move on to copper. Now, it's come off its highs, and that's despite there being supply constraints. Why is that?
Well, I think people are really concerned, I guess, with the stage of the economic recovery because we are actually starting to still see signs that it is just starting to slow down. We do have supply constraints for concentrate, but overall you can see that the economies, if they do start to slow down, demand for copper will come off, and you'll see the price come under pressure. And I think at the moment, with inventory bills slowly increasing, the perception is that recovery is starting to slow down.
All right, Jonathan Barratt, moving on to Australia now. One of the big issues there has been the mining tax. Yeah. There is speculation that the new Prime Minister, Julia Gillard, will water down the policy. Do you think that Beijing and other importers will take comfort from that?
Well, I think that the government will water it down purely because they want to get into power at the next election. So I think it'll be a political play that will see it watered down. Concerning the international players, I think they'll see it as a very solid move, that the old game they had about buying companies in Australia that produced resources will be back on. So I think internationally people will view it as a positive.
And just how damaging has the debate over the mining tax been to Australia's resources industry? Has it been relatively contained just domestically?
No, I don't think so, because we had a lot of projects out there and a lot of projects were shelved as a result of it. So I think we've got to get back our credibility so we can see that influx of those projects start again. And I think that will take some time.
All right. Well, as an industry, participant and watcher, do you think it was a mistake to roll out a policy like this?
Oh, yeah, very much so. I think the key there is that you need consultation. And I think the market was taken back by the sheer suddenness of the tax. And I think if you think the petroleum resource tax we had, there was 2 years' worth of consultation. This virtually happened overnight. So I think the industry is quite happy to sit down, and I think the industry says, look, if we need it, we need it. But let's talk to us about it and spend some good time discussing the pros and cons.
All right, we're getting close to time, Jonathan Barratt, but I'd like to move on to gold, where earlier in the week we saw investors take solace in the precious metal off the back of the G20 meeting, but it's pulled back from those recent highs. Why?
Look, it just feels like profit-taking. Gold has tried about 4 times to break through this 1250, 1265 level, and each time it hits it, it comes off. So I think it's more to do with profit-taking and a stronger dollar that is actually stopping gold from breaking through.
And you mentioned the stronger dollar there. Will consolidation in the greenback lead to continued weakness in gold?
I think it will. I really do. Because if we see that move to the dollar, without concerns in the economy, without geopolitical concerns out there, then people will look to take profits and gold will come back from its highs.
All right, Jonathan Barratt, always good to talk to you. We'll have to leave it there.
Thanks, Whitney.